Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilburn, and I'm joined today by Bob Icino. Hey there, Bob.
Good to be here on such an interesting day, Jeff.
No doubt about that, and Happy New Year to you. We've already started out 2019 with the continued volatility, but I want to get your volatility perspective and outlook for 2019, Bob.
You know, so oftentimes we hear about borrowed data and borrowed growth from one quarter to another. We've borrowed volatility over this past, say, 12 months or so from the previous years when vol was low. That's going to continue in 2019.
Oh, that's really interesting, and we did see that 2017, that suppressed volatility, and now all of a sudden we are seeing the toothpaste come out of the tube. But are you ready to get in this first lightning round?
Let's do it.
Apple guidance. Wow. We definitely saw a significant move in Apple, down nearly 10% on the day, and that is really dragging down the NASDAQ 100 and the whole sector, as we saw the NASDAQ 100 down over 3% at one moment in time. But that revision, that guidance revision lower about revenue, is that really a surprise, Bob?
No, I don't think it is. Honestly, I think Tim Cook just addressed it. The buy-in holders should be coming back in my opinion. The speculators are getting knocked out. So what I'm looking to capture is the recent increased volatility caused by the Apple guidance in the E-mini NASDAQ 100. And a great way to express this opinion would be by selling the week 2 6100 puts and buying the week 2 5900 put in case it extends that NASDAQ drop. This trade expires on January 11th. Again, selling the 6100 put will allow us to collect about 80 ticks to cover the cost of buying that 5900 put for protection. That's about 36 ticks. That's going to leave us with a credit of about $880. Now, the underlying March futures contract was trading at about a 62.17 when we priced this trade, and the at-the-money volatility was at about 30.42.
This trade example makes a lot of sense. And when you see people really fearful, when you see one of the biggest move in Apple over 6 years, we haven't seen a drop like this. When you also see the NASDAQ down over 3%, there's a lot of fear and anxiety in the market. Instead of buying that put spread, there's a lot of option premium in this trade example. Therefore, I like the way you're approaching by selling the put spread and trying to collect that from a short-term perspective.
And again, I think those people that believe in Apple as a company will come in when the selling stops.
Great stuff, Bob. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round. New year, new Fed. Well, the Fed, what a predicament we are in. No one really saw the 10-year note in 2018 being under 3%. Now in 2019, we're at 2.62%. We are really seeing a reach or a grab for treasuries. That's the safe haven trade, which we haven't really seen in quite some time, Bob.
Yeah, an inversion now of about 20 basis points as of when we're taping this from the 2s to the 5s. That's a big inversion.
Well, it'll be interesting to see as we see maybe markets heal a little bit. So the trade example I want to utilize is in fact watching yields go back to that 3%. I think we're pretty close to the lows of 2019 at this 260 level. So I want to be buying the week 2 that's going out to January 11th, just like Bob's trade. But I'm buying that week 2 January 122 put. And I'm selling the same expiration, the week 2 121 put. By buying this put spread, it's defining exactly what I want to pay. I want to pay about 3 ticks or $50. And this trade does expire on January 11th. And the March contract is underlined. Remember, we priced this trade example and it was trading about 122.30.
So this, to me, my opinion, is the reason Jerome Powell added press conferences to all the meetings in 2019 so he could react to this kind of data. I think you're right about where the yields are going.
And I think it's quite surprising to see the yield come down to this level. That actually gives the Fed, believe it or not, I think gives a little bit of a cushion. It softens that tarmac for the landing of all this interest rate rising talk, correct?
And we'll see Jerome Powell address that, I think, in the very first press conference of the year.
All right, Bob. Well, thanks as always. I want to thank you for tuning in to Striking Options. And please tune in every week as we will continue to strike options.